tomorrow we have futures and options settlement. What are the expectations from this time's expiry? Let's discuss that with Siddharth Bhambre. Siddharth, good morning. Thank you for joining us. If one maps the broader environment is no longer looking all that constructive. Nifty is struggling to go past 6,050, but on the flip side, it has some support closer to 6,000 or 5,980.
Good morning, Nikunj. We are seeing that market is full of skepticism at this point of time. There's a lot of pessimism in the market. Look at this scenario or the talks which are happening in market right from 5950 odd levels. First, from 5650 to 59,56,000, people didn't participate. It's only FIs who were buying. Then the rally from 5950 to 6050 was supported by Reliance, Infosys and ONGC. So people started cribbing that it's only these 3-4 names which are leading to the rise, and the other stocks are not doing good. In fact, other large caps have corrected. And that was right, because they corrected because of long unwinding. And then when market again bounced back from 6,000 level, a lot of people flocked into mid caps. Again, market didn't correct it, but mid cap carnage was seen. So what I'm trying to highlight over here is that stronger hands where they were buying, these stocks didn't corrected. Weaker hands who didn't participate, who were cribbing about market, they participated in mid caps and that corrected. Now again we are seeing that technically if market is making new high, now we are at multi-year high. Still people are skeptical, no, the market breadth is not good, so this market may correct. Yesterday also, generally people sell on news. So we had this rate cut which people were anticipating and people wanted it desperately, though RBI reluctantly did it. Now market corrected, we again become skeptical. Now look at the data part. FIs continuously buying in cash market, the activity in FNO was not that great. Yesterday, more than 700 crores of index futures bought. Now after quite some time they have formed long position in index futures. DIs continue to sell, not because their fund managers are bearish, but because they are getting redemption pressure, because retail HNIs are seeing the cost of or the NAV is reaching to their cost price. All these factors put together, we are clearly seeing that the stronger hands are buying and weaker hands are selling, and markets are making new high. So why do I concentrate on the breadth? Why do I concentrate on which stock is going up and which stock is not going up, where 70, 80, 90% of the trades happen in the Nifty, which is making new highs. So all these factors clubbed together, we remain bullish on market. I think expiry can be above 6120, 61 or above those levels. And we continue to hold on to our long positions. For people who are still skeptical, we would suggest don't short this market. Don't get into mid caps, though the froth in the mid cap has been now behind us. And form long positions. Either you buy index futures at current levels or a slight dip, or if you want to take less risk, then I think you can buy 6100 call option of this series and sit tight for next 2 days.
Siddharth, what about the banking pack though? Because much unlike what we saw on Friday as well as Monday, post the policy we did see some weakening setting.
Hi Aisha. Same reason for that people have booked some profits. The only trouble over there is HDFC Bank, where we did see some short position, and we all know that HDFC banks carry maximum weightage in Bank Nifty index. But look at the other components. SBI corrected yesterday, but we didn't see huge formation of short positions. In fact, that 2500 resistance is there, and we anticipate a breakout above those levels in SBI. There's still some amount of shorts which are lying in SBI and PNB, and these shorts would start getting covered. ICICI Bank showed huge formation of long positions. ICICI Bank is not a stock where you see weaker hands trading. In fact, yesterday FI's data, they have been buyers in stock futures also. And look at the long positions getting formed in ICICI Bank, Axis Bank, because of corporate action which is happening. So, barring HDFC Bank, most of the heavyweight Bank Nifty banks are looking positive. We have an upside target of 13,700, 13,800, which will, get into Feb series. But as of now, if I want to trade in Bank Nifty, I'll hold on to my long position. I'll form fresh long positions as long as Bank Nifty is not going below 12,520. That would be my stop loss. And probably till 13,200, 13,300 I'll wait if I'm just a week long trader, and if I can hold it for more duration, that is still Fab end, then 13,800, 13,700 is what we are looking for Bank Nifty.
Siddharth, you're insisting that this is a good time to buy this market?
Yeah, Nikunj, predominantly, on the factors which I mentioned earlier about FIs buying this market and DIs forcefully selling because of redemption pressure. And look at the skepticism. I'm going to say you are asking for rate cut. RBI gave you 25 basis rate cut as well as CRR. You are asking for liquidity. You are getting liquidity. Corporate numbers are not very, very disappointing. In fact, some of the numbers were positive. You are seeing that the other liquidity parameters like crude oil, where equity market has direct correlation, the crude is going up. Whatever the reason might be, geopolitical or OPEC cutting the production, but the correlation is there. You are seeing that euro is strong against dollar. All these factors put together, if every other parameter is positive, why there is so much skepticism? The skepticism is there because you missed out on the rally from 5,600 or probably from lower levels. And that's the reason it is getting difficult day by day for people to accept that this market is heading higher. I may be wrong, but when parameters and data are suggesting that we are heading higher, when market is making new highs, I don't find any reason to be bearish on this market. Yes, there can be a profit booking here and there. You might see Nifty correcting 100, 150 points. But there is no such data which is saying at this point of time, at least from derivatives data and the liquidity parameters, that we will have a crash-like scenario. So in all these factors put together, I would remain positive on the market and hold on my long positions.
Siddharth, closing comments from you. For those who are long, in Nifty futures, should they roll over their long positions? And in the budget month, which is the month of Feb, what to your mind could be the upside for a Nifty trader?
Certainly, with the kind of opinion and what data is reflecting, one should roll over long positions in Nifty, Bank Nifty, and selective large cap stocks. Run up to the budget, a lot of people are already anticipating, Nikunj, that whatever rally has happened is a pre-budget rally and now you may not see it. Now they will go right if and only if weaker hands are also there in market. There is no participation which is happening in market. The participation would come probably in a week where you would see Nifty all of a sudden going 100, 150 odd points, and then people would change their mind because certain resistance level which people are talking about, probably 6150, 6200, those would be breached. And then participation would come which would further take Nifty to 100 points further. I won't be surprised Nifty seeing levels of 6200, 6250 before budget. So I am not in hurry to book profits in long as of now.